Hey there, YouTube. Let's get into a market review. It's been a couple weeks. We've had somewhat of a slower market with the low volatility, not much uh, coming up right now. It's been quite slow. And everybody in the Discord has been doing pretty well, I think, capturing some scalps. But overall, it's just a time in the market where looking at individual names, perhaps you can find some good opportunities, but the indexes aren't really moving as much. And one thing I would point out, looking at the yearly profile here for SPY, this right here is a really good indication showing we have these extreme volume prints on the profile as we've broken into the new all-time high area, really printing some weak volume overall for the year in this area. And the volume, if you had the time volume by time, you would see kind of the same thing, a lot lower volume compared to say the dip buy here in April. And our breadth, not as strong as I would like to see for continuation. We're seeing 59% on average for breadth over 200 SMA. Even if you go to the other ones, the shorter, so 100, we're still around 66. 50, I think we're 67. 20. So the faster we go, we're just none of these are really that hot. Even at growth, 63%, only up to 69% when we're looking at the 200 day. So there have definitely been times where it's a little bit hotter than this. So new all-time high. I think market is maybe feeling a little bit more reserved and kind of waiting. So one thing we do have coming up is some pretty big ticket earnings. I don't know if it's this week. I think it's next week actually. I always forget to click this. So I don't think it's coming up this week. Got some banks. I do think we have some of the smaller tech names, but I'm pretty sure the week after. Yeah, like I'm pretty sure Microsoft is due for earnings here quite soon. July 30th. Okay, so I was a little off there. Nvidia, I'm pretty sure is coming up. Okay, that's not until August. What about Meta? Okay, Meta's coming up here on July 30th. So we have a decent amount coming up. July 30th. Let's say I was quite sure that we did. Yeah, Microsoft, Meta, QCOM, Shop, Google. Here we go, Google on the 29th. So tech earnings is coming up, another season of that. I think the market's going to be pretty interested, specifically from the standpoint of the AI hype. So Meta, Microsoft, Google, they're all going to have a pretty big impact, I think, for AI and whether or not that hype is going to continue to drive things like semiconductors and precious metals and all that kind of stuff. I think there's some economic impact there as well, but not like rate cuts or anything like that. But yeah, anyways, heading back to SPY. So now that we're here, all-time highs, every little move that we continue to pop above, new all-time high again and again and again, and yet the volume's not really picking up. The breadth, the fast trend here on PotBot's looking at S&P 100 breadth, and we're making potentially lower highs. So the slow breadth of this is looking at the same S&P 100, and it's just a little bit slower to update, and it's still positive, but it is on a slight downtrend here. So it'll be interesting to see where we go, but I could definitely see a pullback into that 609 area at the very least. That's that's a good what, 35%. Yeah, okay, that's like 2.5%. That's not too bad. So that's just one thing to kind of consider is the further we go up, the more the market's probably going to kind of maybe be a little more skittish to have stronger buying. Personally, I'm not going ham on the swings, and I've kind of lightened up on the intraday trades just because I do think we're due. Looking at the profiles, daily profiles definitely been incredibly important to my trading as we head into this uncharted territory. Whenever the market makes any kind of retracement, it's always great to go back and look at the prior days, just see where was that value area printed at the highs, at the low, the range. And also, this is a textbook example of just how much power was behind this move with regards to the value area, and the cleanliness of the move is all bull candles going straight on up. when you see this retracement back down, call it dirty. It's a lot of bullish and bearish candles. And so it's no surprise really for me to see a little bit more of a consolidation. So once we had this huge knee-jerk movement, then we come back down, but it's full of hesitation. We have a couple of days of sideways volume value areas being built, kind of coincided with this July 2nd value area here. And then, of course, what happens, we have another kind of strong move, albeit coupled with a strong bearish move, kind of an equal there. And then this melt dirty move up, so kind of sideways, and then we get this nice test here. So 63.33 or 63.30 area is definitely an area of interest. If we ever get back to that area, I would be very cautious for myself personally here. And of course, now we've got tariffs coming back into the market, more tariff news coming from Trump seemingly at random times. So I know there was the pause that had basically hit the expiration date, and now he's making comments. So this one, I believe, was Canada tariffs were being announced. I expect more of that, more volatility introduced by the president of the United States. And you're gonna have to be quick on your feet. Looking at the profiles has been very helpful for me. Oftentimes, when we retrace into prior range, the opportunities exist on the outer edge of prior value areas. So shorts from the highs and longs from the lows. Look for pivots and breakouts after multi-day consolidations. Look at your POCs, either volume point of control or time point of control if you're using APVP here from Trade Seekers. And if we do continue down, see this, I'm recording Sunday night here, and we've got a decent gap down here. This looks to be about 20 points or so. Yeah, about 20 points. We didn't even really hit the midpoint of the gap. So we hit these lows from Friday's pre-market session here, Asia and Europe markets, and US market, just not regular. If we continue down from here on ES, I already had this prepared from last week reviewing with Discord, and 62.50 is an area of interest for me. We do have a bounce low here from last week, and then we've got this multi-day consolidation area here. And that the bottom of that is, we can call it 62.30. So that kind of whole range there is something I'm interested in. And then, of course, if we break that, then we've kind of got some heavy value here. So I think we could chop through that and maybe find a base. If we don't, then we've got some thinner peaks as we head on down into these other areas. Definitely a spot here with some single prints from borrowed term from the market profile world. And that's kind of that 61.75 area. So just looking at that, those are some areas to watch. And looking at NASDAQ, I have not been trading NASDAQ as much here lately. I've really been enjoying ES. Honestly, I feel like ES market respects volume profile a lot more accurately, but that's just me. Very similar movements, however, I would say more constrained, perhaps is the better word. So they're still having similar movements to the ES, but sometimes ES is being held back by ES, and sometimes ES is being held back by the NASDAQ, or however you want to believe it. There's a divergence that has been occurring. So I'd marked this out last week for the Discord, and some of us caught a pretty decent move. And if you zoom out here, so from Wednesday, I'm going to draw a line here, kind of around those wicks. And I mean, just, I know I was just crapping on NASDAQ for being less than favorable for volume profile, but definitely, wick the highs. And blue kind of through this peak here on the volume profile, but definitely beautiful shot here. Grab shorts off of that, no problem at all. And kind of revert back to the mean of the value area. At the time, this is a full profile for the day, but at the time it was definitely more like down here. So that was a great trade. Definitely multiple rejections, lower highs kind of throughout, even into Friday's session. So some of the levels I have for the NASDAQ are printed here on the chart. More than welcome to grab those. For me, it's a little bit more fuzzy compared to ES. So we had 3 days of higher value areas, quite the bullish setup. And at some point, it's got to stop. We had this crash move here, which I don't know. To me, it just it looks a lot dirtier compared to ES. It's interesting to me. The value area is squarely pegged right below the POC of June 27th. So then I would look back to June 25th. So we've got a POC here at 22,560. We have a peak here from 22,670, we'd call it. Actually, I think I'm going to chart that out for myself for this upcoming week. So heading back into current session here, Sunday night, July 13th, time of the recording. We're looking a little bearish now because we've got a decent 75-point gap here, but we didn't really respect these lows. We definitely blew into them some. I suppose you could argue about these ones here. So it's going to be interesting. When I look at ES, I see a lot smoother transition to pullback on the macro time or perspective. But when I look at NASDAQ, it just doesn't look as clean to me. So this just all looks very dirty and hairy. But anyways, so that's kind of what I'm watching. If we head lower on NASDAQ, we do have a TPOC here at 22,708, and then at 22, we just call it 22,670. That would definitely be another area I would watch out for. And we do have a pivot here at 22,780 that we might park at. So it's just a lot of different targets here. And whenever I get too many targets, I feel like it's just not going to be a good time. So heading into the classic setup here, TWAP, previous TWAP ranges indicator, MIT. We had a lot of great trades off of this. So the prior third deviation range, the red lines here, Monday came in hot off of the short week, July 4th. Hope you all had a fantastic July 4th, by the way. Usually I cut my trades once the market hits this line. In this case, though, with VIX being what it is, just kind of making some weird moves. And I've been seeing the market break and retest on this level. And when that has occurred, it's typically pretty much sealing the fate of the market from a directional bias. So if we break lower below this range, it's a bearish day. If we break above this, it's a bullish day. So seeing the BNR here, seeing the top lick being mostly bearish. New York was obviously bearish. Took some good scalps off of this, but it is mostly just scalps. Not interested from a single leg directional like option or futures market. It's been tough with lots of little micro retracements for every move. So get in, get out. It's a take what you can market. At least for me, not a runner's market. Tuesday we come right into chop. That's the best way I can say it. Right inside of prior TWAP range, literally the entire day, never moved. So very gross day here, and mostly neutral top lick. So sometimes I like to look at this for kind of what am I expecting for the next day. So with everything so constrained, of course the next day when we open up, it's a gap up, and we're far away from the prior TWAP range setup that I like to use. And so gotta sit on your hands. It's a good, for me, I tend to assume that when we gap above or below this, pretty typical to see some reversion here. So we did revert to the mean, inverted tick, which is just a bull candle on bear tick. Sometimes can signal a local bottom or top, and in this case, I would bias more towards it being a local bottom on bear tick. We like to invert tick at Trade Seekers. So terrible move if you are a single leg trader. I like to do credit spreads, which I published a couple videos on here recently that y'all seem to be interested in. So I will be publishing more videos of those and trade recaps. This was a perfect put credit spread setup and a perfect day to run it on because you don't have to monitor it. It's very much set and forget. And of course, as we melt and kind of bleed up, the puts just died. So very good day there. This day here, July 10th, pretty decent day overall, but we've had, with the low volatility, a little bit more of an uncharacteristic kind of movement. But when we get New York being mostly green and we're not seeing a lot of bear pullbacks on tick, then I tend to look for those BNRs, and usually I like waiting for the 130, the 1230, something like that. And with how the market is right now, tend to just take the opportunities as I see them. Again, I'm mostly doing credit spreads, so it's a little bit easier for me to manage the risk. Everything's defined, and we got a handful of these kind of in-shaped patterns off of key levels. So here we had one little minute. I would just more call this tick cooling. We had bullish tick, very strong, right on prior TWAP range high here, and we get that little pullback right off of TWAP before we hit higher. Another one on the extension level, and like I said, we've been seeing these BNRs off the extension level, the third deviation extension level, and that signals a bullish day for the rest of the day if we break the higher one. And so we had that, and again, another kind of stronger bull tick setup, little bitty bear pullback here right off of this band, first deviation session TWAP band. Grab some short puts here and rode those up. Perfect for how I trade. And then we head into Friday. So Friday's kind of your counter setup. We stayed inside the range. Strong bounce, double wick here off of the extension level and cross up on the session TWAP. So then when we do that, I consider us to be mostly going to be wedging for the day. So that's why I got these arrows here for Discord and some chart reviews with the members. And so with this, price is going to wedge and just basically continually bounce in between these two levels until one side of the market breaks. And it might not ever happen. Oftentimes it doesn't. In this case, it didn't. So lots of good scalps, kind of have to take what you get. And this day for sure was counter to New York. So those days are real tricky to trade, and definitely there are times where I'll just decide not to trade. But with credit spreads, defined risk on cash settled indexes, I'm willing to engage with a market like this to at least test a couple of my ideas, and I'll profit from that if I'm right. If I'm not, no big deal. So definitely New York holding its bearishness most of the day. We closed at -2.5 to 1. The volume also was -2 to 1. So this gap down doesn't necessarily surprise me on the futures market. I think the market, maybe there's a part of the market that's just waiting for a reason to sell. And, we'll probably see a little bit of volatility pick up in the market, get some things kind of moving and shaking, reset, put a little fear back into some of these bulls that are just, thinking the market's easy again. So we had a little spike on VIX. It's sad that I consider that a little spike, but in this VIX environment, it definitely was. About 2 points, if that, 17. We did hit on Monday, 18. So, the volatility can always spike up. So I'm considering, and we'll have to see what happens when we open up on Monday for options market, but I'm considering grabbing a little bit of volatility exposure. It's not something I do all the time, but looking at buying calls on the VIX or similar setups is always interesting, or selling puts. So anyways, looking at that, I think that's going to wrap up the market review here. Hope you found something useful. Again, we did launch a Discord this year. I don't remember how many members. I think we're floating around 40 to 50 members, and it's been a lot of fun. We've had a handful of events covering market breadth, advanced zero-day options techniques, and lots of great feedback, lots of engagement. And then we're usually on the trade floor every day discussing different things we're seeing, sharing charts. So definitely would love to have you. And you can find the video where I announced the Discord. There's a link there. It should still be live. If not, feel free to comment and let me know. Otherwise, hope you have a fantastic rest of your weekend. Hope you have a fantastic week ahead. As always, thank you for watching and happy trading.